Imagine opening your insurance bill and realizing your monthly payment just doubled. No accident, no speeding ticket, no bad driving history, yet suddenly you owe hundreds more every single month. Just to keep driving legally in America. And in 2026, this is happening everywhere, across Texas, California, Florida, New York. Millions of drivers are entering a financial nightmare. Some Americans are now choosing between car insurance, rent, or groceries. And the scariest part? Experts say this may only be the beginning, because behind this crisis lies a dangerous collision of electric vehicles, climate disasters, AI surveillance, inflation, lawsuits, and a collapsing economic balance. Tonight, we uncover why car insurance in America is spiraling completely out of control in 2026. In 2026, America's insurance system reached a breaking point. For decades, car insurance was annoying, but manageable. Now, it's becoming financially devastating. Drivers across the country report premium increases of 20%, 40%, sometimes even higher. Young drivers are suffering the most. Some first-time drivers are now quoted prices so high, they simply give up on owning a car entirely. And it's not only luxury vehicles. Even normal sedans, family SUVs, and economy cars are becoming expensive to insure. Why? Because insurance companies say America itself has changed. The roads are riskier, repairs are costlier, disasters are more frequent, and claims are becoming massive. But critics believe something darker is happening. They say insurance companies are using fear, inflation, and economic uncertainty to justify historic price increases. Electric vehicles were supposed to save Americans money. That was the promise. No gasoline, lower maintenance, cheaper transportation. But in 2026, insurance companies discovered a massive hidden problem. Electric vehicles are incredibly expensive to repair. Modern EVs are basically rolling computers. Inside them are advanced cameras, radar systems, AI processors, laser sensors, and giant lithium batteries. Even a small accident can damage multiple systems at once. A crash that once cost $2,000 to repair can now cost $15,000 or $20,000, and sometimes insurance companies decide it's cheaper to total the entire vehicle. Especially when battery damage is suspected. Repair shops also became a major issue. Many EVs require specially certified technicians. That means long waiting lists, expensive labor, and limited replacement parts. And then another viral issue appeared online. Drivers began discovering that even tiny repairs on some EVs could cost more than entire gasoline engine repairs from only a few years ago. Social media exploded with repair horror stories, and insurance companies reacted immediately by raising premiums across the industry. Insurance companies say another major problem is impossible to ignore. America's roads are becoming more dangerous. Distracted driving is exploding. Drivers today are texting, scrolling TikTok, watching videos, using navigation apps, and interacting with giant touchscreens while driving at high speeds. Experts warn modern cars may actually be increasing distraction, and crashes are becoming more severe. Today's vehicles are heavier, faster, and packed with expensive technology. One serious accident now creates a financial chain reaction. Hospital bills, legal fees, repair costs, vehicle replacement, and months of insurance payouts. Some insurers say the average cost of claims has risen dramatically since the early 2020s. And then came another problem. Road rage. Violent driving incidents are increasing across major American cities. Insurance companies now face a reality where drivers are not only distracted, but increasingly aggressive. In previous decades, insurance companies feared accidents. Now, they fear nature. Climate disasters have become one of the biggest threats to the insurance industry. Floods, wildfires, hurricanes, tornadoes, extreme hailstorms, entire parking lots are being destroyed overnight. Thousands of vehicles submerged underwater, burned in wildfires, or smashed by storms. And every year, insurance companies are paying billions more in claims. Some insurers have already reduced operations in high-risk states. Others completely left certain markets, especially in areas repeatedly hit by disasters. And experts warn this trend may continue accelerating in the future because climate volatility is becoming impossible to predict. For drivers, this means one thing: higher premiums. In 2026, insurance is no longer only about accidents. It's about surveillance. Modern insurance companies now track speed, hard braking, phone usage, driving hours, location patterns, and even how aggressively you take corners. Some drivers accept tracking programs for discounts. Others call it a dystopian nightmare. Critics warn that America's entering an era where algorithms decide your financial future behind the wheel. One stressful week of driving, one late-night trip, or one moment of aggressive braking could impact your insurance costs instantly. And many drivers don't even realize how much data their vehicles are already collecting. As insurance becomes more expensive, millions of Americans are making a dangerous decision: driving without coverage. Experts warn uninsured driving is rising in several states. And this creates a terrifying cycle. When uninsured drivers cause accidents, insurance companies lose more money. Then premiums rise again, which pushes even more people out of the system. A financial spiral that could fundamentally reshape transportation in America. Now, a bigger question is emerging. What if this crisis changes American car ownership forever? Younger generations are already struggling with rent, student debt, inflation, healthcare, and economic uncertainty. Now, insurance is becoming another major financial burden. Some analysts believe future generations may stop owning cars entirely in large cities, instead relying on robotaxis, rideshare subscriptions, autonomous transportation, and AI-driven mobility services. If that happens, the traditional American driving lifestyle could slowly disappear. And Niandakan and Sal al Niandial Albri all. In America, driving once represented freedom, independence, opportunity, movement. But in 2026, that freedom is becoming more expensive every single day. And the insurance crisis reveals something much larger: a collision between technology, climate change, economic pressure, corporate power, and the future of transportation itself. The question is no longer whether insurance costs are rising. The real question is, how long before ordinary Americans can no longer afford to drive at all? Subscribe now for more deep investigations into EV savings, insurance shocks, America's changing economy, and the future